Hey guys, Claudio Valdivia here with the Think Real Estate team. I am joined by my awesome and amazing co-host, Erica Osborne. Today we are going to be doing the first ever Think Real Estate team investor deep dive. And I'm going to go ahead and turn it over to Erica so she can introduce our keynote speaker.
Listen guys, all you need to know is Corey Chonsky. He's the guy right down here. If this is recording in the same order as we're seeing it on. And so I'm going to actually let him introduce himself. Corey, welcome.
Hey, Erica, Claudio, it's good to see you guys again. As for myself, I'm a Navy guy, pretty shocking for being in the Norfolk area.
Super shocking.
Yeah, so I enlisted in the Navy shortly out of high school, probably a couple of years. I tried college first, didn't go great the first time, so I joined up for the Navy. Eventually, they decided to send me back, and luckily I was able to attend the University of Wisconsin, which, if you ask my wife, feels like I have way too much Badger attire, so I am typically always wearing something. Anyway, eventually got commissioned through the University of Wisconsin, and my main job in the Navy is dealing with nuclear propulsion plants. So that is what my current job is. I go out to subs and carriers and inspect those plants out there, make sure that they are doing all their admin stuff right, operating the plants right, and then I wreck their world and come back home and let them deal with the aftermath, of course. So.
How long have you been in the Navy, Corey?
A little over 21 years now. So.
Oh my gosh! Holy crap!
Yeah. Been a long
Coming to the end of that road, man.
Ready to step out.
Yep, been a long time. So apparently I know what I'm talking about, but we'll see.
Now, how come you haven't? Can't you retire at 20?
I can, yeah. So
how come you haven't decided to do that yet?
So my intention was to try not to do that from a ship, because if I do decide to retire at the end of this tour, it's a little easier if you're on shore duty, just because you're not going out to sea all the time. Even though my job does have travel with it, it's not nearly as much as when I was on the Truman last year. So it's if I do choose to transition out after this tour, it'll be a little easier process than if I was still on board a ship. So that was kind of my thought. Obviously, some people do choose to get out from a ship, and everyone's personal choice. I just figured I'd get a couple more years in, and then see how things go, and then more likely transition out next year.
So that's obviously a big part of your retirement play is the military retirement.
Yeah, I mean, it's nothing to sneeze at. It's a good chunk of change, good safety, good safety net, so that if I go into real estate full time, I'll still have some money coming in. Obviously, I got some money coming in from my real estate properties. Right now, my wife still works, so I mean, we do have some cushion that, if that's the direction I choose to go here in a year or so, that we would have some fallback money that would still be coming in.
Yeah, I mean, for us, it's the same way. It's a part of our retirement plan. That's the benefits that get to stay with you. They're worth enough. So that transitions us over to your real estate journey. So
let's hear about that.
Nice way to come on into it. How did you get interested in real estate?
So I probably got interested in real estate actually when I was a junior enlisted member. I remember one of our senior people at one of my first jobs talking about how by the age of 40 he already had a net worth of over $1 million, and it kind of probably put the bug really in me. My parents had rental properties, but I wasn't really involved with that process whatsoever. So I think it wasn't until later on that I kind of got the real estate bug. Kind of held out onto that for a while until later on, but yeah, I was probably been really interested in it for 20-some years, almost from the beginning of my time in the Navy. So,
Corey, tell us about how you got into real estate. What did your first deal look like?
So I really kind of have two deals that I consider my first deal. My first that I bought did kind of similar to what a lot of people in the military do. Like, hey, I'm moving to this new area. I'm gonna buy a new house, and when I move on, I'm gonna just rent it out. And thankfully I got lucky because the formula was there for me to have been put into a bad spot in a different situation. But, I bought my first house up in Washington State, used a VA loan, no money down, lived there for only really like 2 years, and then had to move from Washington State out to DC. But I was like, I'm going to rent it out anyway, so this should work out fine. Got lucky that I was able to really, cover most of my expenses with a rent. And it was a new construction, so I didn't really run into any really maintenance costs, which was also a lifesaver. So I was pretty much breaking even. And if there was any maintenance items, that was then coming out of my pocket. But like I said, no real maintenance items, thankfully. And then over time, I eventually built the rent up to where it was, I was getting a little cushion coming in from that property. I also got lucky because in the end, that area appreciated a lot. So when we did sell it last year, we made a pretty good amount, which we were to use to, transition to other properties. But I know a lot of military people have been in that similar situation that didn't get lucky like me and found themselves in a tough spot when they weren't able to cover all the bills or their maintenance costs.
Well, it sounds like it was a little bit different for you because most of the military folks that I run into that go down that path, what ends up happening is they become a de facto landlord by poor planning. But it seems like, it seems like you went in there with an intentionality of this is what I'm going to do, and you executed on that. Prior to getting into that property, what was some of the education that you kind of jumped into to you said you ran the numbers prior to purchasing that property. What did that look like?
Oh, no,
what kind of education were you in?
I had the intent, but I didn't really have the level of knowledge per se. I was like, hey, this is a great idea. I'm going to buy a house, so I might as well plan on using it as a rental. So I didn't really run numbers per se. It was just, my desire to get into real estate and an opportunity to do that, but I didn't really have the knowledge that I do now in terms of running numbers. I didn't really think about, hey, what can I rent for it? Rent the property as after we leave, and I didn't really think about all that stuff. So, so I had the intent of turning it into a rental, but I didn't really think about it as a rental. I thought it more of like, hey, this is our house that we want to live in. And I'm sure when we move, someone will also want to rent it out, which, our vacancy was very low, thankfully. So a lot of the things that we ended up doing well per se was more by luck than knowledge and thought out plan. That was like my very first property that I purchased. But in terms of my first rental property, I didn't do that until I got to Norfolk. So 5 years later. So.
Okay. Tell us a little about that one, because you said you had two first deals.
Yeah,
I'm assuming the one in Norfolk was your second one.
Yep. So we moved to Norfolk in August of 2015. We bought the house that we live in still to this day. And then not even a month later, I closed on my first rental property. So I was basically communicating to two different real estate agents when I first moved down here. One for the purchase of our primary residence, and then talking to a real estate agent that I believe he himself did flips and stuff. So when I got here, we kind of got settled because we went door to door pretty much. We moved right into our house shortly after getting into this. So once we got all of our household goods, he went and showed me a few of the neighborhoods that he had flipped houses in, which kind of got me into the Portsmouth area where a lot of my rental properties are. So he showed me a couple different properties, and I found one over by the Bidewee Golf Course area of Portsmouth. Ended up buying that one for about $75,000, put about 15 in. Definitely not one of my best deals, but the numbers work. I pull rent from about $1,100. That was the first and really last time that I actually put hands on trying to help rehab the property. Definitely, I don't enjoy that part of real estate in terms of.
What did you do with that deal? What did you do that was hands on?
I did a lot of the yard work. We took a lot of the wallpaper off. Now
that's a heck of a job.
Yeah, it was. Amber did a lot of that stuff, so that was she did not enjoy that. And we didn't really do anything like major, but we did, little stuff here and there that we didn't want to pay someone to do. So we still had, we installed a new HVAC system, which had been previously installed. We brought in the new appliances ourselves. So it was kind of like 10% us, 90% contractors in terms of the rehab that we did to that place. But yeah, in the end, like I said, we put about 15,000 in. So we were able to rent it out for 1,100. So, greater than the 1% rule, which is, I know a lot of people are happy when they get the 1% rule. I usually shot for higher than that. A lot of my properties fall in between 1.2 and 1.3, with some up as high as 1.5 for this area, which I usually shot, like I said, I usually shot for greater than 1% for all my properties.
Do you think that you're able to shoot for that and get that more so because you look in the Portsmouth area, since it's a higher cash flow area?
Yeah, I mean that plays a part in it. Obviously, if I did it in my neighborhood in Larchmont, Norfolk, there's no way I'm going to meet that. But there's a couple of specific areas in Portsmouth that I like to invest in, at least back when I was doing more single family than I am doing now. Also, a couple years ago, you saw a lot more foreclosures and auction properties. So I had quite a few different ways in which I was looking for properties back then that I don't do as much now because I'm not into single families as much as I was. I got short sales, I got foreclosures, I was on a lot of the auction sites. I went to a couple auctions at the Portsmouth City Hall area. So I some of that also deal with how I was looking for properties. I wasn't necessarily, I found some on MLS, but that wasn't necessarily my primary source. So
how are you paying for those properties, Corey?
It was actually a variety. I used all cash on occasions. I used different lenders. I used some hard money lenders. Pretty much, any way that I felt like it would be advantageous at that point to pay for the property. That's the kind of the route that I went. I often used my own money, just all cash, just to see if that would help with getting a deal at a lower price, which helped on occasion, but wasn't necessarily always the case. So.
Corey, there was kind of backtracking a little bit. So you got into real estate investing. Well, you purchased your first home with the intentions of turning it into a rental. Then there was a 5-year gap between that purchase and the subsequent following purchase, which ended up being the home that you're living in currently. But a month after that, you went ahead and purchased another property, which realistically, you look at it, it's gaining 2 rental properties in a matter of a month if you lump it all together, right? What was the purpose between the 5-year gap, or were you just kind of on pause and working through the emotions of getting ready to be a landlord? What was the gap for?
So the gap, actually, we converted our first house, our first primary residence, into a rental in 2012. A lot of the gap more had to do with where I lived. So in 2012, we moved from Washington State out to the DC area, which is not very conducive for getting started in real estate investing. So basically, I just kind of chalked it up like, there's no way I'm getting a rental here, so I'm not going to really, try. I mean, I continued to read books and try to become more knowledgeable about real estate investing during that period of time. But really, it was more location and circumstance that led to the gap than state personal choice. After I was in DC for a couple of years, and then after that, I was in Rhode Island for a month. A very short period of time, so I wasn't really interested in up there. And then after that, I came to Norfolk, and I was initially supposed to go out to San Diego, but my orders got changed at the last second. So I looked at that as the silver lining, like, well, property is cheaper in the Norfolk area, so I might be able to start my real estate investing. Yeah. San Diego is definitely not purchaser friendly.
Yep. So
it'd be different if you were going back to San Diego as like your forever home area. Then you purchase one out there, then you can rent it out for, the cost while you move away. and then somebody pays down your mortgage, and then you come back, and boom, you have your house in California, hopefully it appreciated, and you're good to go. But yeah, it's a tough market to make a rental portfolio happen, and if you're not already coming in with baller amounts of cash stacked away.
Yeah. So I was actually stationed in San Diego in 2007, and like I said, I was interested already at that point in investing in real estate, and I had looked at some investment properties out in that area in 2007. Thankfully, I did not buy because obviously the following year everything crashed in that area. Yeah. So I'm thankful for that too.
Something saved you, Corey, for sure. For sure.
Hey, Corey, so we jumped right into asking you about specific deals, but we didn't really tell the individuals that are watching what type of investor you are, what strategy you're deploying, how many doors you currently have, or what that investment pool looks like. Can you bring us up to speed on that?
Yeah, so I'm more so a buy and hold investor. Like I said, I got started here in the Norfolk area, which all of my properties are here now since I sold my house up in Washington last year. In that time, I've managed to accumulate 40 doors, and all those properties together are probably worth about $4 million. So as soon as I got started here, I've basically been able to pretty much double my portfolio almost every year since I've been here. So obviously got, 2 houses that first year, not counting my primary residence, a few more houses the following year. And I've just kind of kept up that push ever since then. So for most part, I started with the single family properties in my early on career of real estate investing. And I've kind of pushed into more of the multifamily properties here recently with an 8-plex last year. Claudio helped me with a 6-plex this year. I have several duplexes and some quadplexes as well. So
that's awesome.
That leads us nicely though into potentially your current projects.
What's that?
You went up and added even more. Your current projects that you're under contract on.
Yep. So recently, I've partnered with another local real estate investor, Jonathan New, into a property out in the Ocean View area here in Norfolk, a 24 unit that we're really excited about. Definitely a step up for me. Will be my first property that will be over the $1 million mark. Waterfront property. So surprisingly, Norfolk had looked away from the waterfront for a long period of time, but I feel like that's definitely changing here. It's changed over the last couple of years, and definitely I think that's the future of a lot of investing in the Norfolk area. So 24 unit apartment complex. Like I said, it's over in the Ocean View portion of Norfolk.
Can you tell us a little bit about how you found that deal? And I mean, obviously you can't get into super specifics because it's still under contract, totally understand. But a little bit about how you found it and what's your plan with it?
So right now, we found it off of Crexy. So some of the new websites that I look at deals for, Crexy, LoopNet, although a lot of people talk negatively about LoopNet, but those are some of the sites that you kind of just got to go to in order to see some of the bigger commercial deals. And typically, most of the time, you're able to get access to most of the deals that are online through those websites, especially for the Hampton Roads area. But our plan is now that we have it under contract, we're going to be taking on some limited partners to help us, pay all the acquisition costs and the repair costs, and then look at trying to, improve that and get some money back to the investors that invest with us. So,
with the current state of affairs, Corey, and the stock market all over the place, it should be an easy sell to get people to realize, we can buy something that's tangible that we control, or we can put our money out here and have somebody else manage the purchasing of different assets. And if somebody sneezes at the incorrect time, the stock market is going to fluctuate. So tell us, what do those conversations look like with these potential investors?
So, I mean, really, an investor, whether you're an investor in the stock market or in real estate, I mean, in the end, you're really kind of focused on making sure that you're doing what you can with your money and get the best return possible. And for me personally, I kind of just look at it from my perspective, obviously. But I got completely out of the stock market, I think back in 2017, I want to say, is just because I got really tired of, it didn't really, sometimes it seemed like it didn't really matter what the company was. I mean, they just got a little bad press. That specific stock could dive. And you see in situations like this where you have, this pandemic, you could still have a lot of companies that are performing well, but overall it greatly impacts the market, where you saw, drop from upwards of 29,000 on the Dow Jones to, below 20,000, where we were, 5 years ago in terms of the market. And who really knows what's going to happen with the market for the rest of the year? And if you look at a lot of the experts, saying one thing and another expert is saying something else. So a lot of times it's like no one has a real firm grasp in terms of what the stock market is doing. A lot of people may disagree with that, and they maybe understand the market better than I do now. I felt like I had a pretty good handle on it when I was doing that a lot more often. I just got really tired of really no control over what my investments were going to do. I mean, I could pick the company, but, in the end, hey, sorry, had a little invader there.
Oh.
I didn't really have the control I wanted, whereas I felt like I could get that more so with real estate, because, I
in the camera right now. Oh.
I mean, I like the control that I get with real estate. I can pick the property, I can choose what to do with the property, and then I control, maybe not necessarily the day-to-day management, I choose to be an actual landlord, but I pick who manages the property for me. If they manage the way I want them to, then I get a new manager. So I don't have any control like that over a company. I can pick them, and then everything else is kind of up to the market itself, which sometimes has its own mind on which way it's going to go. So to me,
Have you
control.
ever managed your own properties, Corey, at all, like from the beginning?
No, I didn't really have a strong desire to be a property manager. And with being on ships a lot, I didn't like the idea of trying to manage a property while I was also out to sea, doing whatever the country needed. So.
Corey, I like the fact that, right now, as you're just talking through your life story, you're kind of removing a lot of the excuses that somebody that's interested in getting into real estate investing would potentially have, such as, well, I work a regular 9 to 5. Where would I ever find the time? I don't know how to manage the property. What would I do in that situation? You're an individual that has gone on deployment and is still purchasing properties. Even when you come back from deployment, your property is there. It's been managed, been taken care of, so on and so forth. And you're building that future asset that's going to sustain you past the retirement in the Navy. As you look back, I know that you said, when you were first looking at getting into real estate investing, there was an individual that was in the Navy that was your senior, and you looked at him and he had $1 million net worth, and it was like, yeah, this is what I want to do. Do you see that? Do individuals that you work with currently kind of come up to you and you're providing that figure to them?
Yeah, you're the mentor now.
I don't know if I go into the numbers in terms of my net worth personally with them. I do talk to them. I have talked to several people in the last several years in terms of why I do it, the benefits I see to it. I talk to them in terms of numbers with specific properties and say, hey, I bought this house for this much. I made improvements, and I saw, based off of an appraisal, that I was able to increase the value by this much, and I rent it out for this much. And so I try to keep it basic in terms of that, so they can, it's kind of like, how do you eat an elephant? One bite at a time. So I prefer to talk to them in terms of, this one house, and then I turned it into, this other house. And I think those numbers are a little easier to explain, as opposed to like, yeah, man, right now I got 40 doors and it's worth this much money, and of that I have this net worth. Because then
seems more like a mountain than that they're staring at. Like,
yeah,
it took me a lot to go do that.
Yeah,
whereas it started with this one deal.
Yeah, whereas if you can talk to them in terms of a house that, one that I use a lot is another property in Portsmouth where, again, I bought it for $75,000, probably put about 15 in, and not even a year later, it appraised for over 160. And that gets a lot of people's eyes like, wow, you can't do that in the stock market. And it's just like, no, it's probably really hard, but that was, it was an above average deal, but it's not something that is impossible to go do even in today's market. I mean, obviously the market in Hampton Roads has increased over the last couple of years, but I don't think it's hard pressed to find deals like that even today. So it's definitely within everyone's control in order to go seek out their own deals and make that same type of improvement. I didn't do anything magical with that house other than I bought it right, made the appropriate improvements, and it caused some forced appreciation, which worked in my favor. So,
how did you put together your team? Once you got into town, you had said that you worked with an agent to find your primary residence, and then you found this other agent who was doing rehabs and flips of his or her own. Him, I think said him. How did you slowly start to put together your team with management, CPAs, lawyers, agents, whoever?
So I probably built them through recommendations and just word of mouth type stuff. I talked to other investors, and just working with people. Just because you work with someone doesn't mean you always have to work with them. I mean, you can work with someone just for, one particular deal. And if it works out, it's two deals, but it's not something. Whenever you choose to work with someone, it doesn't need to be a lifelong, partnership. It's, in the beginning, again, I'd done a lot more reading this time when I chose to start investing in the Norfolk area than obviously when I bought my first house. But there are still a lot of things that I needed to learn. And so I got some recommendations, or I communicated with people in bigger pockets. One of my friends up in Rhode Island said that they knew an investor agent from when they were previously stationed here. So they gave me that contact information. I ended up only working with that real estate agent, I think on one or two deals, but that's it. I didn't have any issue with that real estate agent. I got a deal done, and he gave me some names to help me with the rehab on that first property. I don't really work with any of the people that I worked on that first deal with now, but like I said, I don't have anything bad to say about any of those individuals, but it's something that, as you continue to invest and work in the field, you run into people that you prefer to work more with. And then that's kind of how you just build that team, just based off of recommendations and getting out there and doing it with people. And that's kind of how, you find your contractors, your property managers, your real estate agents, your CPAs. And a lot of times on group page, people are asking for recommendations. If I feel strongly about someone, I do not hesitate to say, hey, you should use these individuals. They're great. And I've had, really good luck. I don't want to say luck, but had really good experiences in working with these individuals. And the more you can pass along, the more you benefit the people that have helped you along the path. So.
Has it always been smooth sailing, Corey, or have you hit a couple of bumps in the road? Can you tell us a little bit about those?
I've had some bumps in the road, kind of along the same lines of people that you like that you work with. You work with people that you don't like, and you got to move on from those relationships. So I even recently posted on the group page my experiences with a property manager that I had actually worked with for several years in the area. But I think the big lesson that I took away from that was, if you feel like you guys are not on the same page, I think it's beneficial to everyone. The sooner you can move on, the better. And, may cost a little bit of money on end or what have you, but for your own, your own sanity, it's best to make sure that things that need to get done, you have the right people in those roles taking care of those things for you. I did have bumps in the road. Certain parts of my portfolio weren't being managed the way I wanted them to, and I feel like it probably cost me some money in at least in the short term, and I had to pull the cord and get into different management. And hopefully this agreement that I'm in now, which right now I'm planning on using them for the property that we have under contract, to manage that property as well. I've shifted almost best
in the beginning process. You know how with larger multifamilies, they say bring your team, especially property manager, on board while you're trying to figure the deal out, negotiate the deal. Were they a big part of helping you and Jonathan get into that deal? With their guidance, of course, not as partners, but.
So I've talked to them a little bit about the new property. They were not a big part of that just because I was still in the process of transferring a good chunk of my portfolio over to them. So right now, I'm still kind of in a transition period with them because I haven't even been with them for 3 weeks yet.
Still brand new. Yeah, it's still in
yep.
a relationship.
Yep, nothing like a new property management combined with COVID-19, kind of all within a couple of weeks.
Yeah.
Make life exciting. So, I'm in the process of trying to get everything stabilized under them with my current portfolio. And like I said, I have to the terms of, hey, I got this 24 unit that I got under contract, probably still 60 plus days out before we close on it. So like I said, I have had some discussions with them, but really my has been trying to get my bill stabilized with them before I then new multi-family property on them.
Now to go back to what you were talking about with property managers being part of the team, mistakes, bumps along the road. How about contractors? Do you have any interesting contractor stories?
I haven't had anything crazy with contractors. I've gone through a lot. If I don't use a contractor again, it's more just from either, hey, I think I could probably get a better deal with someone else or a little better quality. I haven't had anything like crazy like you see on the internet where you have this staircase that goes to nowhere, or you don't have
that wasn't necessarily what I was talking about, but that'd be interesting to see.
Yeah, I haven't had anything crazy in terms of like contractors. Like I said, I've used quite a few. I've probably paid in instances, maybe paid more than I should have, or quite get the quality I wanted. The only thing maybe crazy, and I didn't run into it with this particular contractor, was after I used a contractor, which I did have to poke a lot to make sure he finished the job. I got a letter from the Better Business Bureau saying, it was either them or a home advisor that said, hey, we recommended this company to you. We no longer recommend them based off of feedback that we've gotten from other clients. Like I said, I don't know if I got necessarily the greatest quality from, but they did do the job that I hired them after a little bit of prodding. But I never used them again after a specific job. So
that comes back to how you found your contractors.
Again, a lot of it came through recommendations, or I've used contractors through Thumbtack or Home Advisor. Usually there's some sort of rating on them. I've even Googled people. The thing is you're getting recommendations, so you're assuming that people that you work with are giving you good recommendations. And like I said, I haven't really been that way. I never have any like real scarring, from a specific contractor, which I'm sure a lot of investors have had. But like I said, worst cases, I probably owe more than enough for something, or didn't quite get the quality, which sucks because that's not what you want. But not to the extent that I've had to sue anyone or go on Yelp and, blast someone with a 1-star, like this one was awful. I haven't had any experiences like that, thankfully. So, and I know a lot of people have. So
here's hoping to your stairway to nowhere. I hope that you get one.
yeah, just Google it. There's some pretty awesome pictures out there somewhere. So.
That is awesome.
Hey, Corey, so having a property management team there, keeping eyes on your property and making sure that the operation is running the way it's supposed to be running. Obviously, it hasn't always been smooth sailings there, but even if there was an amazing property manager that was in place, there's still a level of participation on your part as the owner that you play. Can you kind of tell us what that system looks like and what kind of communications you expect as the owner of the properties?
Well, I'll say communication to me is on a spectrum, obviously. When there's major issues, I expect way more communication. When things are smooth sailing and there's no like major maintenance issues, there's no vacancy, then there's very little communication. So it really kind of depends on where the property's at, if there's any issues with the tenants or anything like that. I will say that one of the things I like about the new property management that I'm dealing with right now is it's a bigger, more East Coast centric property management. They do have a local team here, but for most of the state of Pennsylvania, they have built a COVID-19 team basically, where their sole focus is having that constant communication with tenants, just to kind of see where the tenants at. What they're able to do in terms of rent is basically just that constant touch point with tenants, and it shows to me as an owner that they are serious about the current circumstances that we're in, and they want to make sure they're communicating fully with both the owners and the tenants, so everyone's on the same page. And as an owner, I can kind of plan into deals that I have coming up here in the next couple of months, as well as as soon as a tenant runs into some sort of issue. Obviously, we had like 3 million people apply for unemployment here this past week, so I mean, obviously a lot of tenants are not in a great spot right now, and they're doing that communication with the tenant and making sure that they get a sense of where the tenant's at and what they're going to be able to do in terms of rent here in the next month or two as we work our way through this pandemic.
Yeah, it's so nice they're being so proactive about it.
Yes.
Right? I mean, it sucks that this is a scenario in the environment that we're in, but it's nice that they're being proactive and trying to stop any issues from happening in the long run. So it's good for your property owner.
Yeah, it's good to know that everyone has an understanding that this is kind of like not just an unusual situation, but it could be one of those generational things that impacts, everyone. And it's like, oh yeah, I remember that time where we were stuck in the house for 2 months. And it takes new ideas in order to work your way through these sort of things. And that was definitely one of the things that made me feel a little better when I got that email from my new property manager. So I'm not sure if that quite answered fully your question about communication, but
yeah,
it's definitely a big with me, and kind of a point where it went sideways with my previous property manager, where I didn't feel like we were on the same page. Sometimes they felt like they had sent an email that I never got, or that they thought they had communicated something with me. But the thing with Gmail is that if someone sends you something, you can always find it again. And when you're telling me you sent me something and then it's not my Gmail account, then as though you probably did not. So.
Well, as soon as you get that little hint of, I guess, lack of trust, it's really hard to rebuild that with any member of your team. So most of the time it's just better to cut and run, even though it's hard in order to do that when they're like looking after that many doors of yours. It's obviously a big undertaking to change from old property management to new with that many doors.
Yeah, but if you're going to change property managers, like I said before, make sure to do it during a pandemic. It puts
makes
life
things so much easier.
Yeah, so much easier.
Hey, Corey,
all right, so what? Oh, Claudia, go for it.
Go ahead.
No, you're so natural at this. You go for it.
I was gonna ask. So your business, it seems like it has exploded up until this point, but it's not, you're not leveling off. There's so much more room for growth. It seems like you're engaged and ready to take on more growth within the business. What is the future hold for you and your organization and your partners, Corey?
So I think kind of this new deal that Jonathan and I have is kind of where I view myself going into the future. I like working with real estate. I like talking real estate. Enjoy reading books about real estate, and really, I think in order to kind of impact more people, to be more involved, the direction of syndication is the way to go there. I mean, the opportunity to basically to take on larger and larger deals, you have to go that route in order to do that. And like I said, this 24 unit is a big step up for me in terms of, just the deal itself, the budget, bringing on new investors, working on a partnership. That's all first for me. So I'm very excited about this route towards bigger properties and moving into syndication, providing opportunities to limited partners or passive investors that, they like the idea of real estate investing, but they don't necessarily want to go out and do all of the, finding the deals, all the due diligence, overseeing repairs and rehabs and upgrades. Being able to bring real estate to folks like that also is very exciting to me, because you can obviously get a pretty good return, and it's not necessarily limited to the folks that are in it day to day. So being able to provide that opportunity to other investors that were not aware that real estate could be for them, even though they don't go out and find the property, is exciting.
Yeah, a lot of people have the money, they don't have the time, but they want somewhere to put their money that it's going to give them a solid good return. Obviously, I'm a fan of real estate. I like the returns.
Yeah.
All right, Corey, how do you analyze your deals? What do you and how has your analysis changed throughout the years of your investing?
That's kind of funny that you asked me that question, because I was recently going through my Gmail stuff, kind of I sort all my emails into different folders, and all the way back in 2008, when I was in San Diego, I actually found the very first spreadsheet. I think I bought it online for like eBay for like $1.
I didn't know you could find stuff like that on eBay.
Yeah, well, at least in 2008 you could. So I kept that spreadsheet for a long time, and actually I was using that for my first several years investing here in Norfolk. I do have more of an upgraded spreadsheet that is able to analyze bigger deals, to include your acquisition cost, your different scenarios, like if we pay this much at this with these terms, and compared to paying this much at these terms. So it's a very much more complicated spreadsheet that I use these days, that then includes return for investors and what we're looking at from the general partner perspective. So a little bit more robust than I had with that dollar spreadsheet that I purchased many years ago.
Hey,
but
you made your money back on it though. I'm
oh,
sure.
definitely. Yeah, like I said, use that for a long time, and I just had to wait like 7 years to really use it. But I definitely got my money out of it. So yeah, but the whole thought process is kind of the same in terms of using spreadsheets to analyze properties. It's just more robust these days than it was before.
Would you suggest that somebody go out and purchase a spreadsheet from somebody else, or start to create their own from scratch?
So if you understand the numbers behind it, it should be very easy to create your own spreadsheets. But if you're not expert on Excel, like I said, that I'm not bad with Excel. I'm obviously engineering, so I've had a lot of experience using Excel, but just the time to take stuff and put it into a functioning model in a spreadsheet, it helped me to buy this thing for $1. I'm not sure if you can find stuff like that anymore. you're probably better off just on any sort of real estate website saying, hey, does anyone got a good spreadsheet I can use? Probably save yourself that dollar. You can use it on real estate investing after you.
I think Secret Pockets has a forms area where people go and upload random things. I think you can find a couple on there, not to say that they're amazing or their numbers are accurate or this and that, do all your own homework, but I think there is a form section under the Pockets where you can upload that. Maybe, Corey, you can upload your very first baby spreadsheet and help another baby investor with your dollar spreadsheet.
Yeah, I mean, I did change that original spreadsheet a little bit, but yeah, I mean, if someone wants it, let me know and I can send it your way. It's simplistic, but it works very well for a lot of just the initial analysis of any single family property, maybe a duplex or a quad, something like that, where you're not trying to analyze a property for pitching to investors. It's definitely very suitable for that. So yeah, if you want that one, just let me know and I can send you that.
I think I'm just curious to see what you bought for $1 off of eBay. If nothing else, I'm just curious what that looks like for my own knowledge.
Yeah, like I said, this was back before I really read any books. All I knew is I wanted real estate, and here's a spreadsheet that allows me to look at properties for $1. I'm on board.
Yeah, absolutely. It's a low investment, a big return on that.
Yeah.
All right, Corey, go ahead, Claudia.
Were you naturally bent towards Excel and numbers crunching, or was that an acquired taste?
I mean, I used Excel a lot for school stuff. So I think I used it a little bit when I was in high school, but I was in engineering courses the first time I went to college, and then I ended up going back into engineering when I graduated from Wisconsin. So a lot of Excel spreadsheets in that path. So if you're scared of Excel, just stay away from the engineering field because you need to use that a lot.
Mm-hmm.
And your engineer brain is super helpful when it comes to being detailed for analytics, I bet.
I think so. I don't know if it's either that or just I enjoy crunching numbers for real estate. I'm not sure, but yeah.
Well, it doesn't hurt. It doesn't hurt the case. So, all right, let's say right now you're hypothetically, even though you are partnering, what do you think that you bring to the table in a partnership?
So again, going back, I like to crunch numbers. I did the vast majority of crunching numbers, sent it to Jonathan. He kind of put his 2 cents in on it. Basically, when I see something I want, I don't have a problem, putting all my effort towards it. So like I said, even back when I first started investing here in Norfolk, I knew I wanted to be in real estate. I knew I wanted a lot of properties. I knew this is how, when I get out of the Navy, I want to, fund my lifestyle, per se. So I wanted to find good deals, get them turned around, get tenants in there, and then move on to the next deal. So I feel like I have a lot of drive when it comes to real estate. So you could probably talk to Jonathan. I'm sending him stuff all the time, like, hey, what do you think about this? Here, I did this, put this together. Let me know your thoughts. So there's probably not many days where we don't talk, where I'm just poking him with stuff. So really the drive to make the deal work, to get the deal done, improve it, get people in there, I think is one of my biggest benefits if someone were to partner with me. We were talking, it's just having previous experiences, obviously a big thing. Both Jonathan and I have done a lot of deals in the local area. So having that good understanding of the market. He obviously has certain areas where he's a little stronger at in terms of market knowledge. He's done a lot more on the other side of the peninsula, whereas I've done a lot in Norfolk and Portsmouth, and have analyzed deals out in Suffolk. But, when you are looking for a partner, if you need to look for someone that doesn't necessarily have the same strengths as you. So Jonathan has had a lot of experience in terms of raising private capital before. And so that to me seemed like a benefit to me because most of the time I've been using my own cash up until this point. using a lot of the Burr method, or before I had all my properties, I pulled out of the stock market, so I had a lot of free cash on hand that I was able to, work through deals that way. So I know that I've been able to return some pretty good returns for myself, and I feel like that understanding of how a deal works, what needs to happen to the deal, and then you can get this sort of return out of it is beneficial whenever you're partnering and so on. So.
Very cool. Hey, let me ask you a question. If you were to start your investing portfolio from scratch, what would you do differently, or would you follow the same path that you took to get to where you're at right now?
I think I would have probably tried for bigger deals sooner. So the first several years, I was basically all doing single family stuff. Now, granted, that helped me in a lot of ways, obviously, because I had the money where I could purchase a property with all cash, where that's obviously harder with a lot of the deals that I'm looking at these days. But I feel like there's a couple opportunities that I missed where I could have got, more units for a similar price, single family, that I missed out on. Maybe because I can think of one duplex that kind of sticks out in my mind, where it was a really good duplex in a really good area of Portsmouth, and really you couldn't find that duplex in that condition for that price these days. And I feel like I missed out on it because I was really stuck to the lender I was using, and they were really putting tighten the purse strings at that time, because they weren't interested in doing the smaller deals anymore. And so when I ran those numbers with the terms that they offered me, it didn't seem like it worked out. But in reality, the price that I had talked them down before I decided to move on from that deal was a pretty good price, and I probably missed out on a deal that would have, returned quite a bit to me if I had gone forward with it, maybe just looking at a different lender. So I would probably have looked at, even if it wasn't necessarily, a 24 unit, I would have maybe looked at more multifamily sooner than I did. Even if it was, more duplexes or quads, I'd have put out a little bit more of a call for that stuff earlier than I did. But at the same time, some of the deals I got through auction websites for single family, which those are some of the best properties that I've done to date. So I mean, it's hit or miss. But yeah, I would have probably went for more units sooner than I did.
Very cool. What books or education would you recommend for individuals that are just getting started in real estate investing, Corey?
Shocking. I would recommend read Rich Dad Poor Dad.
Oh my gosh!
No
way.
Know.
Is that a new one?
Crazy. You guys may not have heard of that one. So I'm obviously a big fan of that, but that's kind of like a mindset changing book. So I read that several years ago. Obviously, it changed my mindset to more what is today in terms of how I look at assets and liability and stuff. But I don't think I can say anything new that you can't say heard 1,000 times on other real estate shows. But definitely Rich Dad Poor Dad. But another one that is often forgotten about is Cash Flow Quadrant, which I think I actually like more than Rich Dad Poor Dad, but I would not have found it without Rich Dad Poor Dad. It kind of takes what you learn in Rich Dad Poor Dad and it kind of tweaks it a little bit. And where he talks about the cash flow quadrant, I think it kind of is more, it definitely builds on a lot of the mindset shifts that you had from his previous book. So Cash Flow Quadrant, if you have not heard of it, which I'm sure a lot of people still have heard of that one, but it's a good book. Another one is The Millionaire Real Estate Investor, where that definitely lays out the plan in terms of, you don't have to do a lot of action, but consistent action over time is what's going to build your net worth and build that retirement fund beyond what I think you can get in the stock market. And in that book, he's not talking about, multifamily units. He's just single family. And then you change some of those from single family to multifamily, and you can just get that much more of a return on your investment. But the Millionaire Real Estate Investor by Gary Keller is a pretty good one too.
Awesome. What about, podcasts and YouTube channels are really big right now. Do you have anybody that you follow their podcasts or YouTube?
I used to listen to Bigger Pockets podcast a lot. I listen more to audiobooks these days than podcasts. I listened to them a lot more when I would drive my ship because it would take longer for me to get there. Now my drive is like 5 minutes. I feel like I spend more time just trying to get everything set up in my car. Yeah.
By the time you get there, it starts. Oh, all right. And time to turn it off.
Yeah, pretty much. So I haven't been as good, but some of the books that I have been listening to is like 10X by Grant Cardone. I just bought the new accounting book from Bigger Pockets. I've only recently got started on that. And I haven't really moved completely away from real estate books, but I've moved into more kind of some of the other business side stuff. So I'm looking at, law. I've read a book about, building LLCs. Now, granted, I'm never going to build one of my own because that's why, I created attorneys, was to then make sure my business stuff is ready to go. And I mean, I'm not going to do my own taxes at this point, but it helps the CPA if you have even just a basic understanding of some of the deductions you can take, some of the things you take out. And when I sent my CPA all my tax stuff, I mean, it's broken down into, I think, the way that they want it. So it just makes it that much easier for them to put everything together and identify all the deductions, which kind of leads me to one point is, if you guys have not Stessa, it's a free online software that can break down a lot of that stuff for you. So it does what I use on my own, where I break things down into spreadsheets and do it per property. And now all I got to do is enter the transactions, and then it puts it all into those different categories for me. And if you're your own landlord, it can just take all the things from our banking website and put it, automatically download it into your Stessa account. It's a little harder for me because I have property managers. So if you want to get all of your maintenance costs and all that stuff, it's not going to download from your website because they're taking care of that on their end. So you do have to do some manual entry, which can be kind of annoying, but overall it breaks it down into all the spreadsheets, and it definitely cuts some time off on the back end trying to put everything together for your CPA. So.
And Stessa's real estate specific, right? Like QuickBooks, you can do anything, but Stessa's for real estate, right?
Yeah, and they're constantly making improvements. I'm not sure how long they've been around, but I've been using them for probably about 6 months. So there was a lot of work for me on the front end just because I can be retentive. And I was like, well, I could just do 2019, or I could put in all this extra just to do all the years. And so, like I said, I felt like I needed to do that.
Make it easy on yourself, do all the years.
I could make this 10 times harder and just put all my data in. And so that's obviously the path that I took. But it's all in there now. And so I just, once a month, maybe twice a month, go in there and update stuff. And it's ready to go. So, my CPA last year was like, before June was like, this is so great how you break everything out in your spreadsheets. And it breaks it down even a little better probably than what I was doing before. Like I said, very easy to export and then send all that data off. So highly recommend that.
Okay. Always do something to help your CPA. Plus it'll maybe bring their hours down, which could potentially bring your bill down. More on the front. All right, Corey. Well, how can people find you and reach out to you?
A lot of different ways. I am obviously a part of your guys's investing page. Send out recommendations, talk about a lot of stuff on there. Otherwise, there's Bigger Pockets. Have a pro account on there, so very easy to reach out. When I became a pro member, a lot of people started reaching out to me, which is weird because all of a sudden I had been a member on there for a while. I just decided to go pro not too long ago, and all of a sudden all these people want to make connections. Kind of weird. Yeah, Facebook.
I think that's a bigger pockets plug for the pro memberships. And
Yeah.
Erica, should we reach out to them for
I think we should.
any sort of contribution?
Yeah, I haven't been able to monetize it yet, but we'll see. Yeah, really through the Facebook group, or just reaching out to me on Facebook or Bigger Pockets is probably the best way. Usually on that most days. So
you're a local trig member as well, right?
I am. Yeah. I do when I can, although it seems like my travel for my current job I don't travel a lot, but they find a way to travel over top 18. So I haven't been there recently, but I am a trig member.
Awesome. Thanks so much, Corey. Claudio, I'm going to let you wrap everything up.
Yep, real quick, Corey. So if individuals wanted to reach out to you in regards to partnering with you on that 24 unit that you have on the contract, what would be your preferred method of direct contact for that?
Facebook Messenger, BP, or I can, if someone wants to reach out, I can give them my email address. I usually communicate usually more so that way than any other method. So, which I'm sure you can attest to, Claudio, in terms of text me. Yeah.
Awesome. Well, Corey, thank you so much for being our first investor deep dive guest. We have it in the books. For anybody that wants to be a future guest, you can go ahead and email us at info@thinkreteam.com. Again, that's info@reteam.com. Erica, my co-host and business partner, real estate agent, an extraordinaire, also an investor herself. We're done for today, guys. Thank you so much for watching. Appreciate you. Talk to you soon.
Thanks a lot, guys.
All right. Thank you, guys.
Thanks, Corey.